Well, good morning on this second day of this great conference. And good morning to those, or good afternoon, good evening to those of you who participate online. It's a great thrill for me to share the stage with Siddharth and with Agustín. And we're going to talk now about one of the most promising, in my view, parts of a very promising avenue of technologies that we see that could be very helpful for the development of the financial system. Obviously, I'm thinking about tokenization and the concept of unified ledgers. We all know there are promises, but at this session, we will try to unpack a bit further what that can actually mean. What we hope to influence in terms of the choices for the public authorities, and how we can set about to begin this journey together. In a recent paper, it's downloaded to a large extent, I've heard, and I hope more of you will keep downloading it as we go forward. Agustín Carstens, General Manager of the BIS, and Nandan Nilekani, who is, among many things, founder of the Infosys, has laid out a vision for the future financial system, and they call it the Finternet. The Finternet, it's a great name. So let's unpack what that vision could mean, what it involves, the benefits it could deliver, and what we need to do to take us there. And it's a great thrill for me to share this stage, as I said, with Agustín Carstens, General Manager for the BIS, very distinguished career, with a small addition these last 2 years of actually taking on the assignment of being my boss. It's super exciting to work for and with Agustín, and I'm very thankful for the trust you show me. And also Siddharth Shetty, very important part in building the India stack, and now work as a technology advisor for the Foundation for Interoperable Digital Economy. So let's get right into this and start with the basic question. What is the Finternet? So let me turn to you first, Agustín. Can you explain a bit to us what is the rationale behind Finternet and what problems in today's financial system we could solve with that and how we could do it?
Well, thank you very much, Cecilia, for this very kind introduction. And it's a pleasure to be sharing the stage with Siddharth, a very young, bright mind that promises a lot for the future. And we have worked very effectively with him and his colleagues under the leadership of Nandan. I think before I jump exactly into the vision, I think it's interesting to see how Nandan and myself ended up writing this paper and having this discussion. If you recall, we wrote chapter 3 about unified ledgers. An initial contribution to that was a speech I gave in Singapore over a year ago. And it was, to some extent, pie in the sky. It was very ambitious, and it was about unified ledgers. The whole issue of unified ledgers, or what we have tried to achieve, is that here at the BIS, at the hub, we have already over 30 projects, but we don't have also a unifying principle or a unifying vision. So we have been doing many things that pushes the bar in one direction. But then the whole thing is how will they fit together? Now, part of this is natural because it's experimentation. Part of it is also because we need to solve, the most immediate problems that our central banks face. But at the end of the day, we need to stop and think, well, where are we going with all of this? And well, also, if you're going to make that very broad question, I think you have to be imaginative and let your mind sort of fly, Therefore, we thought big, and we came with the basic of the unified ledger, which was basically to have an image of the financial system where there would be very easy interaction, where we put the individual at the center, where the individual could decide very flexibly what type of financial transaction, what type of payment can they do. And all of this inspired, for example, by the history of the iPhone. You know, I mean, when the iPhone started, or the way we saw the development of iPhones, we started with pagers, for example, where you just could exchange messages. Then there was voice communication, and so on and so forth. There was gradual evolution. Eventually, we had the apps. But at the end of the day, the iPhone, what it does is they bring all of these services together. So if we had each one individual services apart, we would not benefit of the whole, and the whole really makes a big difference. So that type of thinking inspired us to launch into the unified ledger. How can we bring all these things together? Where markets would clear agilely, where we would reduce a lot of the transaction costs of compliance, and very much inspired a little bit of what Andrea said about inclusion. How can we also increase inclusion into the access of the financial system, of the financial system of a vast amount of the population, many of them even in advanced economies. So I wrote the paper of Singapore. It was well received. And then we went to the G20 in Bangalore. And Anandan is a good friend, and he has this unnatural characteristic of being the ultimate doer. And so, you know, we were going to have a 20-minute discussion just to sort of touch base. And I said to Nandan, this is a speech I delivered. This is a vision. How do we put this into reality? So this was a very, I would say, fertile interaction between an economic financial vision and the interaction with very bright visionaries, a group of people in technology. And Nandan, that really likes challenges, you know, he said, well, let's do it. And he handed over the paper to Siddharth. And Nandan said, how long will it take us to make this workable? Siddharth said 3 months or so. He probably was a little bit ambitious. But, you know, the whole idea didn't scare him, you know. So we put together teams, and I have to recognize Dan Rees from my senior advisor, Iñaki Aldosoro, Cecilia, Hyun, Miguel, Morton, Rodney, Priscilla. Many of us get our mind together, and we started, you know, refining the ideas. And the same thing happened on the side of Nandan and Pradam and Siddharth. The idea was, how can we make this wild idea workable? How can we sort of make compatible, you know, a vision of a future of the financial system that would represent a quantum leap of what we have today, and that it could be doable, you know? And why do I was speaking about quantum leap? Because if we see the progress of how technology has been incorporated into financial practices, it has been very, very gradual. And a very big thing that holds us back are the nature of legacy systems. So at some point, you have to break with the past, you know. At the end of the day, it's not that easy. You have to do a gradual approach, but you also at some point need to do the big jump. I always give the example of when I was governor of the Central Bank of Mexico. And, you know, Mexico is a large country, and we needed to distribute bills. And we had these old planes to distribute the bills. And every year they would come to me and say, we need all this budget to fix the plane. And so I started revising it, you know. And at some point you have to say, I will not modernize, in quotation marks a DC-9 to distribute bills. At some point you have to buy the new technology. At some point you have to say that DC-9 should go into, you know, the garbage can, and you need to get a new plane. And so we got a new plane, and it became very efficient, and we saved a lot of money, and everybody was happy. At some point, we need to do that with the financial system, you know. So a lot of what we discovered is that friction or difficulties is cherished also by some intermediaries because they make money out of it, you know. So to get the dynamics moving, we have to push, but we have to come with a workable plan. And that's what we try to do. The idea is not completely, I mean, the idea is revolutionary from the point of view of what Cecilia said, tokenization. Tokenization allows us to change the way we do financial transactions. At the end of the day, it's a very simple idea. It's instead of having, you know, gradual piecemeal steps to complete a transaction, you sort of package all together in the tokens, and then you just exchange tokens, you know? It's very simple. Now, to get to that degree of simplicity, you have to do many complex things. And there is where the technologies come into place. So I already spoke enough, so.
Well, that's a good bridge over to exactly that, technology. Siddharth, can you tell us a bit more what would be the key technological building blocks of the Finternet and how this could sort of piece together?
Absolutely, and thank you, Agustín, again for giving me a chance to speak at this stage and be a part of the summit. And as technologists, we are just a set of plumbers, so it's been really wonderful to work with the BIS team on putting together the Finternet paper. If I dive deeper into what Agustín laid out, which is essentially the problems that plague the financial system today in terms of speed, costs, and availability of different products and services, when we looked at it, we felt if we truly had to solve for this, the first question that came up was, how do we even approach this problem? Because it's so multifaceted. And the mental models that we arrived at were based on 3 U's, if I may put it. So the first U was user centricity. So how do we ensure in what we're designing, we're truly putting users, individuals and businesses, at the center of their financial life? And this is extremely important because the rest of the technical frameworks and the legal frameworks that we develop will actually be based on this principle. Many a times we design systems putting providers at the center rather than users, and that makes a big difference finally in terms of adoption. The second aspect, in addition to user centricity, was how do we unify? How do you take an approach that allows you to unify across diverse environments, diverse asset classes, diverse sectors, diverse countries? And our view, again, as technologists, is we can come up with a set of architectural constructs that allow us to unify across time, where different countries or different sectors may adopt it at different points in time. Not everyone is going to go live at the same day, at the same second. Yet when they do adopt it, the characteristics of interoperability and other safety-related elements are plugged in right in the start. And the third U that was most important that we felt was the idea of universality. So how do we ensure that the technology, if we really want this to be used, and we want the Finternet, much like the internet, to be made available to over 8 billion people and 300 million businesses, it's very critical that the technology is universal. The technology must be available to all, much like, as Agustín said, if you look at the smartphone. Many of you are carrying a smartphone in your pockets today. Many of you are regulators and policymakers in the room. As financial regulators, one doesn't regulate the smartphone itself. You regulate activities on top of it. If someone creates an application that starts taking deposits, one would get involved. So how do we create an approach where the technology is fundamentally universal, because that will ensure inclusion, but we create enough tooling in the infrastructure to ensure that the flows, depending on the type of transaction, if it's a flow of money, flow of securities, flow of other types of assets, can be layered on with appropriate rules. So these three U's were central to the architecture. And now if I double click on this, what we realized was tokenization was going to be a big enabler. We saw the early wave through digitization. That's what a lot of us are familiar with. The financial system evolved from paper records to digital variants, and digitization was the wave that made that happen. But digitized copies, digitized systems don't allow for easy transactability. And our view is, given the way the world is connected today, we can imagine a leap where through tokenization, you can actually embed programmability into the digital representations. And that will unlock a lot of the transactability, which is a lot of the workflows and the use cases and the applications that all of us want. And a key part of tokenization is that different tokens, depending on their function, will be treated differently. So while the form may be the same, all of them are digital copies, digital representations. If they serve the function as money, you will have different rules than if they serve the function acting as a security, which sometimes gets mixed up. And so when we looked at applying this within the current system and layering it on top of the laws and regulations that exist and a lot of the digital infrastructure that many countries have built, what we saw is we could come up with an architecture, and I'll spend a minute just giving an overview of that high-level architecture, where we felt a lot of the custodians today, and this could work across different types of assets. You could have user-controlled assets. So these are my own digital artwork, for example. You may have attested assets, artwork then attested by a gallery. Then you may have registered assets, like a piece of property, land, a vehicle. And then you may have regulated assets like money, publicly listed securities, and so on. And this architecture can work for all four of them, where on one end, we imagine a world where a lot of the existing custodians can act as token managers, and therefore a lot of the rules that today regulators delegate and enforce via these regulated entities would pass through, because they would issue the tokens using a set of on-ramps and off-ramps. When they issue the tokens, they will embed the relevant norms as part of that issuance. A user can tokenize a set of assets, but they could also de-tokenize, bring it back. And we felt that choice is critical, especially in the early days, to build trust. It's sort of like in the early days of digitization, you had people who would digitize but create a physical copy because they needed that. And so you should have people being given the choice to tokenize, de-tokenize. When they tokenize, individuals can create an account on any public ledger of their choice. Into this account, different tokens. So it's not different ledgers, but a user can have their land token, their money token, deposit token, central bank money token, so on and so forth, all issued into that account. But of course, they're free to create other sub-accounts, other authentication and authorization workflows. And then through that, they can transact with anyone else using an ecosystem of applications. And so a lot of the projects, for example, that I heard about yesterday, very powerful projects that were being built within the Innovation Hub and within private sector, today often get constrained by silos. And if we go back to the smartphone analogy, you have the best-in-class entrepreneurs being able to bring different types of innovation to a common shared playground and create applications that serve all of us, that serve regulators, that serve supervisors, that serve individuals, that serve businesses. And we feel that opening up, where ledgers offer the programmability and other key constructs will play a key role. And lastly, we do see this being supplemented by a lot of the trust, what I would call trust service providers. And so you will have attesters, guarantors, verifiers, essentially third-party agencies that would issue trusted credentials, trusted attestations that allow you to create these proof chains that you can then transact with. And to wrap up, as we sort of looked at this architecture, and we also reflected on a lot of the digital infrastructure that we've seen being built out, we felt there were 3 traps to avoid. And we might be able to avoid that. One is the trap of centralization. So many at times we think we can over-centralize, expect everyone to come to the same place. It's not going to happen in the highly diverse environments we will deploy the concept of the Finternet. The second is, how do you avoid the trap of synchronization, expecting everyone to be alive on board at the same point in time? And then the third is, how do you avoid the trap of over-standardization? So what are the most minimal standards, much like TCP/IP, which unlocked a lot of the internet innovation that all of us use? So what are the most minimal standards we need to arrive at, but then allow for different jurisdictions, different regions, different sectors to define their own standards, but yet create mechanisms for easy discoverability of those diverse set of standards. And so that's sort of the underlying thinking behind what we put together, and it would be great to get everyone's feedback on this.
Well, if it's a bit little mind-boggling in the brain right now, it's because it is mind-boggling. So let's see if I can bring this to a more sort of concrete level. 3 takeaways out of a very rich first intervention. Not mending the old DC9s, but sometimes you have to get new ones. A very good observation, by the way, that being a central bank governor is a lot more complicated than only doing monetary policy. So thank you for sharing that experience. But the lesson learned is you have to start over sometimes with new machinery, and that is what the Finternet is about. And second, also important is that and that's a tall order, but sort of building what the iPhone has done for our way of working and interacting, but in the financial system. And the user-centric approach, which I think is hugely important. So let's try to be a bit more concrete. And it's a tall order to fill this with details and certainly to make it a reality. The good news is that, Siddharth, you've done this. You've been a part of a very successful journey, and I'm thinking here about developing the digital public infrastructure in India, part of the fantastic story about the India stack. What are the lessons that you and your colleagues from that work take away that could be applicable for making a Finternet come true?
That is a good question, Cecilia. And as I sort of reflect on what we've built in India, and maybe rather than just narrating what we've built, let me try to abstract out what were those learnings that then influenced the design behind the Finternet. I think if we take a look at 3 projects, 3 DPIs that we built, the first one being Aadhaar, which was a digital identity. In 2008, most Indians didn't have an identity. If it was critical for them to participate in the digital economy, they had to be given a digital representation so that they could transact with anyone in a paperless, presence-less manner. That since was deployed in the financial sector, opened up hundreds of millions of accounts, which, as per the BIS paper, also showed how India leapfrogged financial inclusion by roughly 4 decades. So what we did in a decade would have otherwise, without a DPI intervention, would have taken 5 decades. So what did that teach us? One, technology can be used to bridge a lot of the trade-offs that we have in society, or that we traditionally think as trade-offs and tensions. For example, bridging regulation and innovation, bridging stability and inclusion, bridging data empowerment, where people can use data for things that they value, and data protection and privacy norms. And so constructs in Aadhaar, the fact that it was extremely minimal, only collected 4 attributes versus traditional ID systems which collected 40 to 50. The fact that it leveraged an ecosystem allowed us to do this at 1/100th the traditional cost. It was extremely reusable, and so it got used because of the way the architecture was designed in the financial sector, but then it was similarly used in the telecom sector to open up hundreds of millions of 4G accounts that allowed Indians to plug into the internet. And it was also looking, when the project started in 2008, India had one of the lowest per capita data consumption rates in the world. So a marginal number of people were part of the internet. Yet, if you looked at the trend lines, it was obvious over a 10-year, 15-year period, a lot more would be plugged in. And so therefore, it was designed assuming connectivity starts to fall in place. And so really looking at the future and designing back from that. And today, I think India is probably the highest per capita data consumption country in the world. So those were some of the principles behind Aadhaar that reflected and I think are key to how you think of any population scale infrastructure. Second, when I come to UPI, UPI is a unified payment interface. It's nothing but a protocol that allows you to transfer value from one store to any other. This protocol was first implemented in the banking system by a central bank. It was built on top of the central banking and commercial banking system. So there was no blockchain, none of that involved. It leveraged existing infrastructure. It leveraged existing legal frameworks like the KYC framework or the Prevention of Money Laundering Act that we had in the country. And what it did is the regulators initially said you could only use it to transfer value from one bank account. So the value was INR and the store was a bank account. So from one bank account to any other. And so it's nothing but a protocol that has a settlement system at the base, regulated entities in the middle, and then you brought in third-party innovators. And this was key. In the paper, we talk about the concept of division of labor, or you bring in entities that are specialized in doing one thing, and they can do that really well. And that unbundling dramatically expands the market, dramatically increases inclusion. And so these third-party innovators that came in went in and acquired hundreds of millions of users, tens of millions of merchants. So in 2016, when UPI was launched, we had about 4 to 5 million merchants. Fast forward 5 years, you had about 50 to 60 million merchants digitally onboarded by a range of market players on an interoperable system. So what did that teach us? One, it taught us the power of interoperability. It taught us the power of unification, because today, UPI works not just on bank accounts, but it works on wallets. It works on credit cards, because it's a simple protocol that allows you choose as a regulator what store you want to enable. As trust built up, the regulator opened it up. The third, it worked within the existing legal framework, so took sort of this techno-legal approach. And 4, by unbundling, you really allowed a large number of innovators, private sector, to come in while leveraging the public infrastructure that was built. And the last DPI that I talk about is the work that's happening on the account aggregator. And as we know, India is extremely complex. You've got 1.4 billion people. We have different financial sector regulators. So we've got a central bank and they act as the banking regulator. You've got a capital markets regulator, insurance regulator, pension fund regulator. So almost each sector has a regulator. How do you unify across these diverse environments? Where in 2016, the effort was saying an individual should have control of their financial data, and that should work across sectors, because these sectors are creations as policymakers, and individual, their assets are just their assets. And so that architecture, which now has rolled out, there are about 2 billion financial accounts live on that open finance system. Over 60 million individuals have used it. That taught us a couple of things. One, how do you ensure that when you bring different regulators and public authorities on board, you preserve their own sovereignty and autonomy of decision making? And therefore, everyone doesn't have to come into the same room at the same point in time. They can decide on their parts of the ecosystem, their rules, their limits, their entities on who should participate and who shouldn't at their own point in time. So how do you distribute the ability to solve, distribute the ability to make decisions on the back of a shared infrastructure, so it's not siloed back for the individual? How do you put individuals in the center of their data and give them the tools? And that's where the Reserve Bank created this framework for consent managers, which again was an early example of what is possible when you give people control, and then people could onboard and have choice of different consent managers. Because another thing we realized, and another traditional trade-off that people think about, is this myth between technology resulting in a digital divide. What we've seen is, if designed right, technology actually bridges that digital divide. We've seen people do payments on smartphones. We've seen people do payments on feature phones. We've seen people do payments when they don't have a phone through micro ATMs, all on the back of the same protocol. We see the same happening in data sharing as well. People can give consent even if they don't have a phone in an assisted manner. And so really what these experiences taught us is that some of the key technology characteristics of interoperability, how do you design for evolvability, how do you design whenever you're doing any societal scale intervention for it to be extremely minimal. It should do one thing and do that extremely well. How do you divide, much like Adam Smith says, labor so you can bring specialized entities without risking stability? A lot of those concepts, I would say, were early experiments, what we saw in India. And also the cooperation between private sector and the leadership shown, political and regulatory leadership that was shown. And so we've, of course, really pushed the boundaries. I think there's a lot of new mental models and thinking and solutions we'll have to do to truly bring the Finternet to life. But these were early experiments that I would say influenced the thinking and gave us some amount of confidence, at least, that, as I think it was the German central bank governor said, if you have a vision, it's probably good to see a doctor. I think this gives us some confidence that we may not have to.
Well, you didn't say it outright, but it sounds like you also need three things: guts, persistence, and patience, and a coalition of willing in that venture. So I'm going to open up the floor for some questions soon. But while you're thinking about that, let me ask you. Come back to you, Agustín. Impressive vision. How do you think we should follow up? What do you think about who should build? How do we interact, public and private sector? And yes, what role should the private sector play in this?
Yeah, I mean, that's a key question. As Siddharth very well explained, the idea here is to do it openly so that we can invite all the bright minds out there to pitch into the project. But it needs to have at least a minimum degree of guidance, and it needs to have certainly a very important backbone, I would say sufficiently enough to give security, to give confidence for people to use it, but remote enough so that it's not overwhelming. From an economic point of view, I think a key aspect is to think, I mean, if you think of the Finternet as a living body, you need a heart and you need a circulatory system. What is the heart and the circulatory system in this case is a little bit also what we are developing internally, which is Agora. And Agora, basically, I mean, through time, we have learned that we have put a tremendously effective monetary system based on the interaction of commercial banks and central banks. At the end of the day, what makes central bank money to be singular, to be exactly the same as central bank money, is the fact that all those payments are settled in the accounts of the central bank. And that's a construction that is extremely valuable. I think I cannot imagine a payment system or a financial system without this. So through Agora, precisely what we're trying to do is how can we tokenize commercial bank money and central bank money and make it flexible enough to be used to different uses, and we are starting in particular with corresponding banking. So that's a key building block. The other aspect where we need to also do tremendous upgrade is to be able to provide the adequate supervisory, regulatory, and legal certainty to the whole system. At the end of the day, when we're talking about financial system, it's based on trust. Now, all this, there is the technological architecture, there is the architecture of finance and economics. There is also a whole architecture of how to underpin the trust in the system. And that's another area where we will need to work with lawyers, with regulators, with supervisors. But it has to be in such a way that is sufficient, but is not intrusive, and that it doesn't generate silos. The other thing that is important is precisely for different players to embrace the idea. I think Agora and the Finternet is a very important invitation for different financial intermediaries to jump into this project. I think what Finternet is important is that it can be a win-win situation for everybody. I mean, for example, if you see the debate between central bank money and commercial bank money, oftentimes it is, well, we shouldn't do central bank money because it might crowd out commercial bank money. No, here everybody is invited to the party and everybody plays a very important role. We want a win-win situation by making life simple to the user, by cutting all the red tape, by making it efficient, by making it informationally complete, by opening options to the user. I mean, one of the aspects in economics we often identify as a second best is the fact that we don't have complete markets. If you allow for programmability and so on and so forth, you can really complete markets, and you can really be able to make conditional transactions that today you cannot conduct. So we need to be building these structures, these skeletons. Obviously, the private sector needs to do a lot of the engineering, but we and the public sector, we need to give them an enough platform for them to have room to run. And part is technology, part is it needs to be financially and economically solid. It also, and we also need what I would call the trust structure, the trust infrastructure for this to work. Yes, as you said, this requires guts, requires patience, requires energy. So I invite all of you to start thinking on these issues.
Thank you very much. I'm going to open the floor for questions. I see some hands over there. Sir Vincent, you get to choose. Please state your name and if you're addressing someone particular in the panel.
Thank you. My name is Fabio. I'm from IBM. I've read the unified ledger concept. It's very interesting. And the Finternet, where it lifts me alone is I have trouble to understand whether you foresee one single infrastructure similar to the internet in the sense of if I'm a producer of a router or of a switch or of a smart bulb, I just plug it in and it is standardized and it's running. If I compare it to the finance sector, we have the ISO 2022, which kind of defines the format, but it doesn't give me the right to participate in the network. And I wonder if you could elaborate a bit more on which layer you see the Finternet working to be open so that it is a really unified infrastructure for any kind of transactions.
Okay, that's deep into the tech. Let's take one more question and let the panelists think about the first one.
Dorothée Delors from the World Bank. I would like to push your parallel with the iPhone and ask you about how would you avoid concentration risk and the emergence of a few critical providers like we see in China or even in India with the risk of monopoly or oligopoly? And how would you ensure that you keep an open environment with a multiplicity of providers?
Okay, who would like to have a shot at these two?
Sure, I can answer the first one.
Yeah.
So I would actually ask a question back, saying, what in society today is only one? Do we have one language? Do you have one type of smartphones? Do you use one programming language? The answer is no. There's always multiplicity. I think part of it does come from the blockchain world, where there was an assumption that there'll only be one blockchain and the whole world will fit on that, but that's extremely unlikely. So society has always had multiplicity. And so the question is, even if you look at the internet, the example you mentioned, there is no one internet. It is nothing but a network of networks. It has thousands of different types of providers, thousands of different networking companies, switch companies, gateways, telecom companies, device operators, fiber cable, submarine cable companies. I mean, you've got multiplicity of providers at each part of the stack, yet they're able to come together in a network because of a set of open protocols and then actually coexist. And then different people can innovate at different parts of time. People can set their rules on what they want to allow or not allow. So really, I think when we're looking at it from a financial ecosystem lens, it's extremely important that we don't assume there is one ledger, for example. It's always going to be multiple. And so it's critical that we architect for multiplicity. And that's where constructs like interoperability play a role, standardized protocols play a role. I think to the second part of your question, which was, there's ISO 2022, was that what you mentioned, 2021 or 2022? And while you can, align with those protocols, it doesn't give you access to the network. I think that's really for the regulators to answer. Different countries and different, financial ecosystems will have rules on who can participate and who can't participate, just as they have rules today on who can be a commercial bank and who can't, who can participate in the payment system and who can't. But you can create architectures where, for example, what we did in UPI is we layered it in a way where the money always flowed through regulated providers, but third-party innovators didn't have to be regulated. They could go out, acquire hundreds of millions of consumers. They didn't get regulated. They were fintechs. They focused on the consumer experience. The traditional banks and others focused on stability and grievance redressal and KYC and other norms. So I think we can look in an architecture that allows for, different types of actors to come together. But yes, while you may align with the protocols, the rules of that network will be left to each sectoral regulator, who can issue a bond, who can issue a security, who can issue money, so on and so forth.
Agustín?
That's a key question. There is, something that I just cannot prevent saying is that at the end of the day, that my concentration could be a result. It might be that we cannot prevent it. But I think there are many things in the idea of the Finternet that could at least have a good chance to make it more diverse, more competitive, more participative. First, we need to, from let's say, the regulatory, the public policy point of view, we can try to make it as open as possible. I think, if you reflect, for example, how the payment systems in many countries have been developed, and you're very familiar with this coming from the World Bank, many, many years ago, 60, 70 years ago, the payment system was, in a way, delegated to the banking system. Central banks decided, well, this is not for me to develop. Have you commercial bank develop it. And so it developed, but after a while, and then you had the regulators pitch in and so on and so forth. And at the end of the day, we ended up with walled gardens. And what we want to avoid is precisely that. So from an architectural point of view, in the finance, in the economics, the idea would be to prevent creation of open gardens. What I think Nandan and Siddharth and Pradhan have really make us see is we also need to provide the technology so that we can have a community of thinkers being able to participate. So also that from a technological point of view, this is not kidnapped by one particular player, you know. I mean, at the end of the day, you can have the aspect of competition and you know, the fact that you might rely on a few players from an economic point of view. In technology, well, that's a field also where there is sometimes not enough competition. So I think we have to strive for it. We have to strive for it. And I think that we have at least from an architectural point of view, a good chance to make the system definitely more open, more competitive, more contestable as what we have today.
Our time is up. I'm sure we could continue this for a long time, but we have other very interesting sessions to do. I take away the party invitation. I think that was a great message to you all. And in that party, let's have high ceiling in the hall so we can let ideas fly high and wild. Thank you very much, Siddharth. Thank you very much, Agustín. Back to you, Kudruta.